It's Morning Call. My name is Mark Gardner. 22nd of September 2025. The rally on Friday night continued on US-China talk and a phone call between President Trump and President Xi. It covered a number of topics overall, TikTok deal being one of them. But the market was largely buoyed by, obviously, optimism around this TikTok deal, the fact that China and the US are talking, first phone call in 3 months between the presidents and the leaders of the two biggest economies in the world, and rate cut hopes essentially. And we had a couple of downgrades over the weekend. S&P or Moody's, I can't remember which one specifically. Sorry about that. But they essentially put the chances of a US recession at 48%, a major upgrade to the recession chances. We also had, we've also had over the weekend as well, which didn't play into these markets. The Republicans and Democrats couldn't come to any agreement, or even the Republicans within themselves, because they control both houses, for the funding the government. So we are spiraling towards a government shutdown. They've gone into recess at the moment, and they won't return until the 29th, 30th. So the government shutdown is on the 1st, essentially. And so that literally gives them a day, basically, to get it all done. It's now widely expected that they will, the government shutdown will happen. But look, we've seen this all before. And it's a bit of a circus, and a lot of threats come, and then a lot of finger pointing, etc. And then at the last minute, sure enough, everything sort of gets funded, the debt ceiling gets raised. So yeah, look, ASX not really performing too well, probably one of the weaker ones, and yeah, which I find very surprising. I think commodities have been doing quite well. Overall, Friday really was just enthusiasm around the tech sector. As you can see here, NASDAQ up 0.7, S&P up 0.49, but the Russell was actually down after a fairly good week. Not much going on there in Asia overall. And yeah, whilst we did have a small win on Friday, a little bit bitterly disappointed over that. I suppose a little bit of risk off attitude into the weekend, because you just never know what Trump's going to do, and you're sort of exposed for all of that night session and then all of the weekend essentially. So yeah, at the moment everyone's very distracted by Charlie Kirk, the Charlie Kirk funeral that's going on, but overall it is just a distraction. So and condolences to his family, etc., but not a lot to do with financial markets and what's going on in the economy. And it is really hogging all the headlines at the moment. So as you can see here, Apple got an upgrade from JP Morgan. I dare say probably because they're in a load of cash. I think the Meta's announcement and release of the Meta glasses, which is going to try to position itself over the next few years as a potential smartphone replacement, is a massive risk to Apple. So I don't really know where that upgrade came from, apart from, they were saying that Chinese numbers potentially for the iPhone 17 were quite strong, and there was some anecdotal pictures of crowded Apple stores in China, which, look, could have been from any time, anywhere, and been the most populated country in the world. It could have been a Tuesday 3 weeks ago. So we had Oracle and Palantir still drifting higher. Oracle is involved in the TikTok deal and will supposedly host. So there's a little bit of trouble here with these announcements, because Trump will go and announce something, and then obviously they were still talking on, when they had their phone call. So stuff does get announced, and then it's one of Trump's favorite, one of his favorite negotiating tactics. He announces something, and then it makes the other person the bad guy if it doesn't happen, even though it hasn't been agreed upon. It's happened on a lot of the trade deals, particularly with China. I think they've struck a deal about 4 times now, and China's gone, well, no, we haven't. So, and yeah, so very speckled green, really. Tesla's still showing a little bit of strength. There was a deal with one of the agricultural companies towards the end of last week, a heads of agreement for 10,000 of the Optimus robots. If we start, and then they also got Arizona has basically agreed to do testing for the robo taxis. Yeah, I think, you know, as much as everyone's hating on Elon on Twitter, if you just block out that noise and analyze Tesla and what's going on with Tesla, even at these expensive prices, I think it's probably, you know, with a new market coming on board, and we've all seen what companies can do with a new market, Nvidia and Palantir in particular. If the revenue is going to come, you know, doesn't matter what they're priced here on a trailing PE basis. So they will be, you know, potentially fairly cheap long term. As you can see, the rest of the market relatively flat, to be honest. Micron drifted back a little bit, but it's been on an absolute tear over the last couple of weeks. Our favourite small modular reactor company, Oklo, rallied another some 28% on the, you know, I think around about 50% for the month now. It is a small market cap, but more, you know, more talk around nuclear and more talk around small modular reactors coming out of that US meetup. They're going to, I think there's going to be a lot of co-investment there, and they're going to get the POMs on board with that. So I dare say Micron's pullback on Friday was to do with the fact that it's got earnings on Tuesday. Everyone is really positive on it. It's had a raft of upgrades, but it may be just a bit of a case of, you know, like, is the reality going to be as good as the expectation, essentially? Our Global Alpha has had that on for the last week and a half. We actually trimmed or sold out for some clients on Friday night as well, just thinking that, you know, at this point we've made 30-odd% in the last few weeks, last couple of weeks, and yeah, the risk is probably too high. Just, you know, even if they have a decent earnings report. So not too many other names you'd be paying too much attention to this week, excluding Costco. We'll have Costco on the call on AusBiz TV on Thursday, but that'll be before their earnings, not after it. So, but we'll have a bit of a deep dive into that. We got a raft of Fed speakers this week. We did have a fair bit of chatter over the weekend about US electricity prices going to record highs, and record highs of a percentage of CPI, and, you know, doubts around inflation. So we still haven't heard the S word, stagflation, much in you know, in any of the financial media or from any of the Fed members. But the bottom line is that the downgrade on the weekend from Moody's or S&P cited that 911,000 downgrade in jobs, and saying that the you know, not only the chances going up that, you know, there is a chance we're already there in recession wise. So with contracting labour markets and a slowing economy and rising inflation, that's the definition of stagflation. Only other time it really happened largely was back in the 70s, and we've got very common traits here at the moment with precious metals going through the roof, the US dollar bumping along some pretty key support here at the moment, etc. So the final GDP and core PCE numbers on Friday will be, you know, they're the last revisions of the quarter. So you normally have advanced, preliminary, and then final. These final numbers are a revision of the last two, so they're not very volatile. Won't be expecting too much out of them. There are some manufacturing PMI numbers, UK today, US Tuesday. I think Australia and Europe's got some as well. And we had China's last week. So, Uranium Energy Corp might be worth a watch this week, as those uranium stocks, as you'll see in a minute when we get to the look at this uranium, and that's not. I had to double check that. So that's 2 nights that the ETF. So we're talking a broad-based basket of stocks here, not just one stock, up 8% or more. I've never really seen that in an ETF outside of a geopolitical issue and the gold ETF going or something like that. For a broad sort of industrial based sort of commodity, that's quite extraordinary to be up 17% for the week. And it makes everything else look really small. But silver as well on Friday was trading at the recent 14, 15-year highs and got whacked in the last 10 minutes. And this is not uncommon. There's obviously still a short position out there in silver from some of the instos, but got whacked 1% in the last 5 or 10 minutes to make sure it settled down below 43. And I'm really expecting that, it got hit during the middle of the week last week, and the fact that it got back up to those record highs at 43.40, and I'm talking futures here, I think this could be the week we start to see silver explode to the upside. We've still got some. There's still some yields rising in the back end of the curve, the long end of the curve, the 30s and 10s, which is not going to help markets either. Equity markets in particular. But despite that, we finished at record highs. So it's a bit of an odd one because people will be reading the fresh record highs, but there is genuinely, and I have a tendency to be a little bit, not necessarily bearish, but always looking for the risks, because that's my job, to keep people out of trouble and my clients and MPC clients. But so I tend to take the bearish stuff with a grain of salt and not just drink the Kool-Aid. But there is a fair bit of the bearish news starting to build up. And for instance, margin lending went over $1 trillion for the first time, and is sitting above there. So it means that accounts are very leveraged for individuals in the US. And we've also seen, obviously, in those inflation numbers go up, government shut down, and the market cap to GDP, which is Warren Buffett's golden number, is now 15% through record highs. It's the most expensive. But look, to be honest, the way that we are globalized these days and what these AI guys are selling to the whole world, I think that's, that rule's possibly had its day, because these companies now, the Apples, the Microsofts, the Nvidias, the Googles of the world are selling to the whole world. So their market cap in relation to into the US GDP probably far less relevant. So I don't, the world is a changing, is a changing place, and I don't think those are necessarily appropriate. But they're definitely running out of, every single stat known to man is flashing red at the moment. And yet here we are at record highs. So yeah, now I'm just going to run you through here significant underperformance of the ASX uranium stocks. So the URA ETF, and this is the last 12 months, is up 90%. So Paladin and Boss used to be about 5%, and then the top 10 holdings of these ETFs, they're now 2% and less than 1%. And as you can see here, we're talking at bare minimum, the rest of the world's uranium stocks, and I don't know really what happened here, but basically Boss had a production downgrade, as sort of did Paladin in a way. I think Paladin was kind of at a bit of a frothy record high here, but look, production issues aside, long term, there is a lot of stocks in that URA ETF that are pre-revenue, for God's sake, let alone not having production problems. So we really do need to maybe take a little bit of a perspective pill and start to realise that production problems aside, these companies with the Sput and Sprott ETFs, physical buyers, and Cameco rallying over 100%, etc., etc., etc. I mean, Kazatomprom, which is it sort of dips between being the biggest and the second biggest in the world with Cameco. Realistic, I mean, they've all had production problems this year. So yet they're up 90%, and the Dow old ASX is sitting here down 18 and 31. There is a lot of upside, I think, in these guys, and I think they're well worth having a look at overall. We hold a bit of both, but obviously we've held Oklo as well in that SMR in the US, and it's up quite considerably as well. One thing that's going to support this gold and silver move continuing is the dollar index is on 18-year key trend support. So this is back to 2008. We did have a brief breach here, 2011, and I dare say that was probably when we had that. There'd be around those periods where they had that silver spike. But when we're talking, fairly key support here. I mean, it can slip through and then maybe come back up over the trend line potentially. But this is a weekly chart and goes back 18 odd years. A break here to the downside is going to be pretty pretty horrible, I would say, for the US dollar overall. And with government shutdowns happening, ratings agencies downgrading the US economy for a recession, more talk of rate cuts, etc., etc., etc. I don't see any fundamental reason for the US dollar to hold in here. We're only talking, it's 7% to get back to this support here. I would imagine that that's 7% further down is going to be another key support. We'll wait and see, but I think that is marrying up very nicely with the precious metals moves in particular, and more expectations of rate cuts and recessions, etc. So I would be very much watching out for that in particular. I think Japanese bond yields as well going through the roof. So, there could be risk of a carry trade move here at some stage. And, with the Japanese bringing back some, the Japanese insurers are some of the biggest US bondholders in the world. If they can get the same yield in their own country, they tend to be fairly nationalistic, though I do believe that they will. So, we will see what pans out here, but it's definitely something to watch. Credit spread's still sitting at lows, and we'll just keep an eye on those. We are having a free webinar on Tuesday, the 7th of October. It's about the security super cycle, investing in a new world order. You can register, check out our socials. There's a link in there. It'll all be around, what you should be investing in this security super cycle, and the increase in defence spending over the coming, 2, 5, and 10 years, and everything down to precious metals, cybersecurity, and the military companies themselves. So do yourselves a favour. I'll be running that. It's been a very popular thematic, and we've got a couple of key investments in that area. And it'll be around about an hour. It'll be about midday Sydney time on Tuesday, the 7th of October. So hope everyone has a great day today. Stay safe out there in the markets. I think the bearish news is starting to catch up a little bit with the market. So just be a little bit cautious. We will speak